Hello and welcome to BloombergQuint. This is the earnings season and we have earnings from Just Dial coming in. Well, it's been a fairly stable quarter, though considered to be mixed by the street. To take stock of what's happened in the quarter and to perhaps give us an outlook, we have the CFO of the company, Abhishek Bansal, joining us now. Hi, Abhishek. Thanks for joining us. Let me start off with, the momentum in the business. If you could tell us about how your search business has panned out and also updates on Search Plus. Can you tell us a little more about the visibility with respect to earnings as we move forward into the next couple of quarters?
See, coming to last particular quarter, it was a decent to healthy quarter for us. In terms of operating performance, the usage of the product continued to see good traction. We had about 108 million unique users on a quarterly basis, which was up about 34% year on year. Our database continues to expand. So we grew to about 20.7 million listings, which was up about 20% year on year. In terms of financial performance, top line grew at about 9.2% year on year, which was highest growth rate in about last 5 quarters. Hopefully, we should be able to build on it further. The key highlight during the quarter was strong growth in EBITDA margins. So our quarterly EBITDA grew about 80% year on year. So last few quarters, whatever efforts that we have been taking on the cost side, improving productivity, etc., all those seem to be playing out.
Abhishek, also coming down to your paid campaigns in terms of volumes, can you take us through how that's panned out quarter on quarter and year on year? And also perhaps a few highlights because some market analysts are considering the paid campaigns growth that we've seen even on a year on year basis to be slightly slack.
See, paid campaigns were at about 441,000 for last quarter. So revenue growth of 9.2%, it's a function of paid campaigns as well as realizations. So realizations which were on a structural decline due to growing mix of tier 2, tier 3 cities, we have been able to pull that back by about 7% from the lows of 4Q17. Going forward, yes, it has to be a mix of both campaign growth and realization growth going forward. But as a business, we are clear that it's the revenue growth that counts. There could have been a scenario that campaigns could have grown by 10% and realizations could have declined by 10%. Net business would have been flat year on year. But in short term, when we are consolidating our business, I think, yes, campaigns have been sort of sequentially flattish, but I think that's fine. Once we expand further, we should be able to bounce back on campaigns as well.
Abhishek, the other area of concern was your traffic growth. Now, again, we certainly have seen on a year-on-year basis quite a jump with respect to your traffic growth. But sequentially, over the past few quarters, the kind of growth that we are seeing is the growth is tapering. So can you tell us about a little more about your traffic growth and how you are addressing this concern?
See, first 2 quarters, if you see, first quarter we had about 22 crores of advertising spend. Second quarter had about 18.5 crores. In third quarter, we did some experimentation to see that if we reduce our advertising spends, does our traffic actually go down? How do the growth rates pan out? So our experiments have been quite successful. In third quarter, we had only about 14 crores of advertising spend, which gave us this 108 million unique users. Going forward, we do intend to spend 8 to 9% of our top line into advertising spends. So those particular spends coupled with the new release of our app wherein we are bringing in new set of features, they should help grow the usage of the product even further.
Okay, Abhishek, can you tell us a little more about realizations in tier 2 and tier 3 cities?
See, realizations, as I mentioned, overall on a blended basis, they grew about 5-6% year on year. The ticket size obviously in tier 2, tier 3 cities is much lower compared to our top 11 cities. Realization growth by and large has been similar in both tier 1 as well as tier 2, tier 3 cities.
Okay, Abhishek, and if you could also give us a possible update on price hikes that you intend to take over the next couple of quarters.
See, we took some price hikes about 3 quarters back along with the launch of our advertising campaign. So in terms of price hike, our algorithm automatically takes into consideration how traffic is panning out for specific keywords in specific geographies. Any further price hikes will be dependent on how we think that market will be able to absorb those particular price hikes. So far, the price hikes that we took about 3 quarters back, they have given 6-7% jump in realizations. So let's see how it pans out.
And finally, Abhishek, if you could give us an update in your process to eventually become a transaction-led platform. If you could tell us where you reached there, what are the updates here?
See, we are a horizontal local search engine, right? So from a user perspective, we want to ensure that users are able to find anything that they want at any point of time. They should also be able to transact. As we speak, we have about 20 plus search services that are live on our platform. From a SME point of view, we want to give them tools which could help them run their business efficiently. So as we speak, we are providing them digital payment solutions. We are providing them their own mobile-friendly transaction-enabled websites. So there are efforts ongoing on the both sides of the segment in order to cater both to users as well as to SMEs.
Abhishek Bansal, it was a pleasure speaking with you. Thank you very much for your time.